Thank you for tuning in to another edition of the Vulcan Report. This report is for trading Friday, November the 8th. Taking a look at the S&P 500, this is the E-mini S&P 500 futures contract. As you can see, the market hit a new high on Thursday, expanding the weekly trading range from top to bottom. All right, as you can see, this is a massive bearish candle. Okay, pointing downward. We do have still in place a negative swing VIX. Except for the swing VIX is trying to level off, like it's trying to build a support right here. One note of caution: sometimes there are days like that happen, only for the bottom to fall out of the swing VIX, and then it accelerates to the downside. Also, it can turn upward. A case in point, here on September the 27th, we noticed that we begin to base out. The next day, on the 30th, the next trading day, we hit a low, right? Then the swing VIX immediately turns up, all right? Then quickly loses momentum, and then crashes back down again, and then finally takes off. Okay? Tough to say. All I know is we're still in a bull market. We still have a situation where it's trying to lock in bullishness. Even though yesterday was a down day, we still have what could possibly be an attempt at a bullish reading. So that means we could bounce up on Friday. My evidence for this, the last time we attempted to lock in on October the 11th, it was preceded by a rally. The next bullish attempt was on October the 28th, followed by a rally. Now, on October 30th through November the 11th, we stayed locked in, but we also moved sideways. We didn't really head lower, but we moved sideways here. Okay. Then it was preceded by a rally. Okay. So are we reliving October 30th through November the 1st, that 3-day period where we headed down only to shoot back up again to new highs? That remains to be seen. So we just have to look at what we've done in the past to know where we may be headed in the future. So for trading for Friday, this is what we're looking at. On the shorts, we're looking at a short at 1740 and a half, and on the top side 1758 and a half. So that's what we're looking at for a possible breakout. Anything inside of that is no trade. We just see that as noise and the market moving sideways going forward. All right, here's a picture of the Dow. This is the Dow futures. All right, the mini Dow, as you can see. Same situation here. All right. The only difference is we have nothing locked in at the moment. We had the prior October the 30th through November the 1st situation, followed by a rally, but we have nothing locked in on the positive or negative momentum side. So right now, the market, even though we spiked with a new high on Thursday, we're still considered neutral as far as momentum. There's really no commitment in the market one way or another. So we do have to consider that for trading on Friday. Even though we got jobs numbers coming out and all that, we still have to see how the market is going to digest this information. It is possible the market could ignore the news and still continue to rally, or it could receive good news and crash. So we just really don't know where we're headed. We know that we're still locked in a bull market. We're trading above the Kumo cloud. We do know that. It's always tricky when you're trading a market that is trading near its highs or all-time highs, because then you start to have doubts on whether the rally will continue or not. And for the most part, who's to say? Maybe it will, maybe it won't. But it's just one of those situations where you really don't know, and you're really confused as to what's going to happen. Only thing you can do is follow your indicators and follow your trigger points. So for trading on Friday for the Dow futures, the mini Dow, long at 15,659, short at 15,528. Again, trading range has been expanded on the weekly support and resistance levels, so that's how we're going to play it there. Okay, once again, here's crude oil. Okay, notice how it's trying to lock in a downtrend here. We need to now see if we're going to get follow through. All right, market is still bearish. Okay, as far as momentum, we are still bearish to slightly neutral based on Thursday's trading. We had an up day, and you see we also have a blue bar here signaling bullish momentum entering the market. Let me give you a note on that. Just because you see blue or red bars doesn't necessarily mean anything. It just means that in during these trading sessions there was a lot of bullishness or buying in that market, and the swing VIX picks that up. Okay, you can still have buying on the way down or selling on the way up in the market. What the swing VIX attempts to do is to look at market depth and get clues to where the market may be headed, regardless of what you see on the actual price movement side. So it looks at the put options and call options and takes it's a big quant. It crushes a lot of data. So needless to say, swing VIX still negative. Okay, trying to cross as of Thursday and form upwards. Hard to say if we're going to get that or not. Last time you saw the swing VIX had an up channel, price movement started to move with it. Then the price movement diverged, price action diverged from the indicator. Okay, then the indicator turns negative here. Okay, price action and the swing VIX moving together. Now the price action is attempting to stall right here. So we don't know if we're going to follow through on that or not. We're going to have to wait and see. We could be building a base around here, but it's just too early to tell. This downtrend has been well established for quite a while. Okay, so how do you play it? Well, you got to stick to, like I said, you got to stick to your support and resistance areas, stick to your indicators. So for Friday's trading, we'll look to see if we get a continuation pattern to the top side. Look to get long at 94.56, and on the downside, looking for the market to lock back in its downtrend at 93.72. So that's where we're going to play the crude oil for Friday. Alright, taking a look now at gold futures. Again, on Thursday, market tried to turn up here on the swing VIX. So it's possible that yesterday was a spike bottom and the gold may try to turn around from here. However, I cannot ignore we are locked in on the negative side as far as the bear market is concerned. Bear market is intact. Bear in the bottom right hand corner. Bearish momentum locked in. Swing VIX is trying to turn up. Swing VIX leads the market 3 to 5 days out. So it is possible that we could still see more downside momentum, especially since we're locked in. Last time we saw this, look here, September the 30th, which is my birthday. Market had a massive down day the following day. Okay, same thing here. September the 20th, fell out of bed. Okay, very possible. Again, October the 9th, bam, followed by 4 more down days. Okay, swing VIX leads the market 3 to 5 days out. We crossed down here, price fell down, crossed up here, we fell down, price falls down, price price has been moving with the swing VIX beautifully, just so you know that. But we cannot ignore the locked-in downward momentum. So we could still see a major crash coming in the metals, especially with this locked-in negative momentum. And we're not overbought or oversold in the swing VIX. Swing VIX has been ebbing and flowing. Look at this. It's been ebbing and flowing, but it hasn't been overbought. We have not seen an overbought or oversold gold market in quite some time. Everything right now, you know, we're having bearish engulfing candles. So because we're not overbought or oversold, we still have more downside to go in the gold market, and that's what we have to look at. So Friday's trading on the locked-in negative side, I look to get short at 1296.70. On the top side, look to get long at 1310.80. Okay, our last chart of the day will be silver. Okay, all right. Take a look at the silver. We are locked in negative momentum, bear market, bear at the bottom side of the screen, but a little bit something different is happening here. Let's take a look at this. A long lower shadow has occurred. That's what this bar is right here. This is typically a bullish signal, particularly when it occurs near a low price level, excuse me, at a support line, or when the security is oversold. 3 black candles occurred in the last 3 days. Although these candles were not big enough to create 3 black crows, steady downward pattern is bearish in this scenario. Okay? Keep that in the back of your mind. Don't get too happy because you saw a bounce right here. Again, this black bar, this black candle, indicates that the swing VIX is starting to get a little oversold. But we could lock in a massive downward move from here. I made the video a few days ago. Warning is a silver crash coming. It looks like we may see that. This is a red alert. If you are holding a long position in silver futures, red alert. We could see a major downward move come a washout that will crash below this trend line support of $20.64, leading us down to the teens, to that $19 level. All right, be alert that this is a major alert signal. Okay, when we get overbought and oversold within a trend, it usually has explosive movement. The last time we had overbought oversold was on August the 14th, where we hit a high of 21.79, and what happened after that? We exploded all the way up to $24.98, almost $25. That's a huge move. Okay, you're looking at a $4 to $5 move possible after you get these overbought oversolds. Okay, they are major signals. Again, last time we had a situation like this, August the 27th, all right, market was around the $31 handle, somewhere around there, $31. What happened? We exploded, folks, and we end up hitting $35.12. So this is a warning, all right? All things being equal, can the market turn from here and just rally and explode? Of course it can, surprise us. But all things being equal, history is a good barometer. You saw what happened in the past. Be forewarned. Trading for Friday, we're short at 21.57, long at 21.78. Very tight trading range. Let's see what happens, folks. Remember, take what you can, give nothing back.